So I'm really excited to talk about our new product, the ERC Protection Report, which is an efficient, cost-effective way to protect your ERC claim. I'm excited about this because, as you probably already know, the Employee Retention Credit is a complex tax credit, and it's a tax credit the IRS is putting a lot of scrutiny on. And I talk about it in a lot of my other videos, but the main reason is, unfortunately, there was too much fraud in the system. Too many people were claiming the credit either without any documentation, or in some cases, they were completely illegitimate companies. They weren't even in existence at the time period in which the credit was in place to claim the credit. And so the IRS is cracking down on ERC filings. And so I explain a lot of that in my other videos, but while many claims, and I would say most ERC claims are legitimate, many of them lack the substantiation or the documentation the IRS requires. A lot of folks were sold on basically what I call robo-filers, who were gathering information and robo-filing and not meeting the detailed substantiation and documentation that the IRS requires. And so all of these requirements are listed in what's called Notice 2021-20. And I have a bunch of videos that goes into all the other details about these notices and all the nuance there. But the key thing here is the idea of contemporaneous documentation or contemporaneous records. If you've never heard of the word contemporaneous before, don't worry. That's what the tool's here to help you with. But the key thing is the taxpayer has to have contemporaneous documentation that meets the IRS standards to demonstrate eligibility. You may recall that there's a few ways to demonstrate eligibility for the employee retention credit: gross receipts, a decrease in gross receipts, what's called a partial suspension of operations, as a result of the suspension of your supply chain, or perhaps what's called a recovery startup business designation. So I go on all those different ways to establish eligibility in other videos as well. But the problem isn't typically with identifying eligibility. The problem rests in demonstrating and documenting the eligibility. And so that's the purpose of the tool. So let's go take a look at this. This is the ERC Claim Protection Report, and you actually get to see behind the scenes exactly how we built this out. You'll see here, when you go through this process, there's some basic information that we're requesting: name, email, phone number, right? Basic stuff about who are you, so we can communicate with you and get this report to you. And so we're looking at what's the name of the business and what's the business do, right? What do we do? How do you operate? And specifically, how did you operate during COVID? How did you have to change things around? Now, these notes are not the basis for what forms the substantiation, but it gives us an understanding of what you do. We just need to know, what do you do in the business and how might you have changed operations during COVID? So it gives us a basis to understand, well, does it seem like there's beginnings of what we call a reasonable basis to claim the credit, or do we need to dive a little bit deeper? And then we ask, for the state of operations. Where do you do business? In person? Where do you conduct business? Because every state had a different set of modifications and restrictions, and oftentimes not even at the state level, but you had different county restrictions. Sometimes you had local restrictions. For example, I'm in Southern California. I live in a county called Orange County, which had different restrictions than our county next door with Los Angeles County. So very, very different. And then even LA City, Los Angeles City had different restrictions than LA County. So all these we want to get that information so we have an understanding of what you're doing and where you're conducting operations and what modifications may have been applicable to you. So then we'd say, what is the amount of the ERC that you filed for? If you didn't file, then it's just enter 0. How much did you claim? Have you received your refund? And what was the reasoning? What were your qualifications around this, right? So I talked about those qualifiers before. And if you don't know your qualification, then that's fine. Leave that blank, because we want to know. If you don't know why you qualified, definitely need to document that, because that's going to be one of the first things that you're asked about in an audit. Well, why did you qualify? Was it gross receipts? Was it partial suspension? Was it partial suspension as well as supply chain? Was it the recovery startup business? What was the qualification there? And so this gives us a good overview of where you at and what was the reasoning behind the claim. Then we're going to look at full-time employees. This is a critical part that's almost always overlooked. There's specific rules around the number of full-time employees you had, and depending on certain thresholds, if you had a larger business, you had different rules and different activities and different qualifying events based off the number of full-time employees, or what's called a full-time equivalent employee. So there's a very specific calculation you have to do about the number of hours worked to determine whether or not the employee was considered a full-time employee. And then even if they worked some of the year, not all of the year, all of that. So we want to look at just what your full-time employees were. Don't worry about all the details details of the calculation. We just want a rough number for right now, so we could know, do we need to go a little bit deeper? Do we need to do a full-time equivalency analysis test? And then government grants received, right? This is another very common area where we see a lot of errors, where the government grants or other credits were received, but they weren't calculated or documented correctly when completing the ERC calculations. So PPP, that was a big loan program. Most businesses got 1 or 2 PPP loans that were ultimately forgiven by the SBA. FFCRA stands for Sick and Family Medical Leave that you may have claimed back in 2020 and 2021 for folks who were off either taking care of themselves or others as a result of COVID. There were tax credits related to FFCRA, SVOG Startup Venue Operations Grant, RRF Restaurant Revitalization Fund, R&D Research and Development, W02C Work Opportunity Tax Credit. So these are all different credits that have an impact on how the qualified wages for the purposes of the ERC were calculated. So we'll want to know if you received any of these, how much they were. Again, we're not going into super detail. We're not looking at quarter by quarter, payroll by payroll, but we do want to know what grants did you receive during this time period so we could look to see were these things accounted for correctly. And then lastly, upload copies of U941X. I'll have to if we're going to go through this process and put together this report. Being able to take a quick look at 941X helps us quickly identify corrections and potential errors, potential situations you want to correct before it becomes an issue. Of course, this isn't shared with anybody else. And the reason we use JotForm, you can see here, JotForm allows us to collect information and keep it all encrypted so that it keeps that data secure using their platform there. And then upload any copies of any supporting documentation. One of the key things that is typically overlooked is what we call the narrative, the impact analysis report, the narrative around the employee retention credit. So all the clients we've worked with have a very comprehensive narrative impact analysis report that was completed. And this is there because it documents that contemporaneous information of why did the taxpayer claim the credit, what's the supporting facts around the credit about the partial suspension or the gross receipts or the supply chain, or even if you don't have a report, if you just have notes or emails, whatever you have that's internal, upload that. If you don't have anything, that's fine too, right? You can just skip this part and we'll make recommendations on how to put that together. And then lastly, if you have any extra comments, just go ahead and put those comments in there, clarifications, explanations, provide a little extra context. That's the form here, right? So this is designed to be cost effective and most importantly, time effective. So you're not spending a lot of time doing this. And then once we receive this information, my team will go to work and we'll identify, one, where are the key risk areas? Are there certain areas that are high or low risk? But two, most importantly, we're going to be looking at things like we're going to be compiling a list of, well, what are the government mandates that were in place based at the time you claimed the credit, based off your geography, based off your business type. So you're going to get a report back that lists all those mandates that would have been applicable to your business. And that's really the crux here, because that information is one of the key areas that we see folks who are unprepared for an audit because they don't have that information. So the IRS comes back and says, well, what were the mandates that you were forced to operate under? What was the impact of those mandates? And oftentimes there's a deer in headlights. If you don't have those mandates, you don't have an explanation of how those mandates affected your business, this is a critical part of what you're missing. And so this is designed to be super efficient time-wise, super efficient cost-wise. So go ahead and fill that out and we'd love to help you.